JSE All Share Index remains muted, hovering around 11-month lows as rising US Treasury yields and the prospect of a longer period of high interest rates continue to weigh on global markets. Khanyisa Ngesi, Head of Investment Solutions at Absa Group, joins us now to take a look at the latest market moves. Thank you very much, Khanyisa, for your time this afternoon. Before we take a look at the movements of the Rand, give us an overview, rather, of how the markets are faring.
Thank you, Dudu. So similarly to yesterday's moves, the top 40 briefly fell to new year-to-date lows after the open, but it has since edged a bit better. The moves that we've seen till now are much less volatile than yesterday's close. We've seen tech, gold and diversified miners providing support alongside healthcare, property, telcos and food retailers. However, our PGM miners are lower, as are banks, retail and construction stocks. Volumes are slow ahead of a lot of the global macro data that will be coming out. We've seen a little bit of a mid-morning recovery after the early pressure that we saw to the Rand. The Rand hit new 4-month lows of 1943, but when I last looked at it a few minutes ago, it's currently trading at about 1926, 1927 to the dollar. On the corporate side, news has been quite light. However, Mondi have reported that they formally completed the sale of their Russian assets that drove the stock higher in September. Anglo-American has begun a global headcount reduction program, and we've seen Tiger Brands down by about 4% on big volume standouts, hitting new 15-month lows.
Okay, so you've covered the Rand. Gold prices headed back towards 7-month lows in early trade. Help us make sense of the factors influencing moves there.
Well, Dudu, we've seen the very strong jobs data that came out of the US, which saw an unexpected increase in August. And we saw then the dollar strengthening on the back of that. In conjunction with that, we've seen an unprecedented rise in U.S. bond yields, specifically the U.S. 10-year bond yields, which are currently trading at 16-year highs. And you can imagine as an investor, if you are getting such high yields on bonds, it diminishes the demand for non-interest paying assets like gold, and hence you've seen the pressure on gold prices. In conjunction with that, we saw the US Treasury Secretary Janet Yellen yesterday saying that she's very optimistic about the outlook for the US economy, adding that inflation was coming down in the short term and that the labor market was extremely strong, obviously on the back of that very strong US data that came out. And that also has put pressure on the Rand, as I've highlighted with regards to the exchange rate.
Sure. Let's take a look at this. As some retailers ration the buying of eggs, government is considering introducing a temporary rebate on import duties of chicken meat to combat a potential shortfall in the face of a number of highly pathogenic avian influenza outbreaks. Talk us through those developments and what level of reprieve it will offer customers.
Difficult to say at this point in time because ITAC is in investigative status to consider the creation of a rebate on meat and edible offal of fresh, chilled or frozen chicken. Just as a reminder, Dudu, 66% of our meat consumption in South Africa is actually poultry, due to the fact that it's seen as the most affordable meat source. And in conjunction with that, eggs are seen as the most affordable protein source. Just over 2/3 of the consumption of meat in our country is from chicken. So this is exceptionally topical and will have an impact with regards to the 2 strains of avian outbreak that have been reported. It has led to the culling of around 2.7 million chickens, which is quite substantial. And this is on the back of a poultry sector that's been under exponential pressure due to load shedding as well. So the ITAC investigating a rebate on import duties is being expedited. Interested parties have been given about 2 weeks until, I think, the 16th of October to submit comments to the Commission. where ITAC must consider whether this temporary rebate should only apply to ordinary custom duties or whether the recently reinstated anti-dumping duties should also be included. Just as a reminder, we've just seen the reimposition of anti-dumping duties after them being suspended for about 12 months in August, where the imports of frozen bone-in chicken portions already carry a very, what you can say, favored rate currently. Imports are from Brazil, Denmark, Spain, and Poland and Ireland. And they carry additional duties for the next 5 years. Now, there have been comments from several market commentators, specifically the CEO of the Association of Meat Importers, and they've welcomed this announcement. However, SAPA, which is the South African Poultry Association, is actually dismayed at the directive and the potential scrapping of import duties. They are of the view that the current situation actually doesn't justify a rebate, and that the potential shortage is actually no more than 30% if the culling is done, which hasn't completely happened yet. So that's where we are.
Yeah. Where do you see that going? I mean, now we're looking, I guess, in the long term when the situation has been handled and something has been done about this flu.
Look, there are several ramifications of this. As I said, I mean, the bulk of protein meat consumption by our consumers is in this sector. There are sort of certain, I guess, contingency plans that are being put into place, i.e. Importing of eggs from certain markets that are close to ours, importing for broiler production, etc. Negatively, for example, Namibia has banned all chicken and egg imports from South Africa. To note is that we are going into the fourth quarter, which is the festive season, which for retailers and restaurants obviously is their highest time of retail and sale, and for consumers is the highest time of consumption for said products. So if we end up having a shortage of poultry, even though we have contingency plans to import eggs, for example, etc., it will have severe food security implications. It is a basic staple protein. However, I think it's a bit early to tell what the full ramifications will be. But we've already seen scrambling of retailers and restaurants trying to source as much as they can. Some restaurant owners and retailers have come out to say they've secured enough supply to be able to cover them over the pending festive season. Some, unfortunately, haven't made those plans yet.
Okay, a division of the healthcare group, Ascendis, is no longer in business rescue. What does this mean for, as a whole, rather?
So the firm's surgical innovations segment does stay commercially viable on the JSE. It's a division of Ascendis, which is no longer in business rescue. It's had quite a few tax woes which have forced the voluntary move earlier this year. So what has happened is that the board of directors of that division, which is Surgical Innovations, is announcing that they've successfully exited business rescue. They do remain confident that Surgical Innovations will continue in existence as a solvent and commercially viable operation. It's valued at about 460 million rand on the JSE. I mean, the group itself, Ascendis, has really had a tumultuous 10 years since it listed in the JSE in 2013. And they've run into problems, whether it's from run-ins with the SARS, which have caused some untenable financial strain. So with regards to Surgical Innovations itself, over the course of the past year, they've already paid a sum under SARS voluntary disclosure program as part of this cleanup. And subsequent to that, they've already assessed a further 67 million. So it is the largest division within the medical services segment within Ascendis. I mean, it represents leading global agencies.
All right. Very quickly, for us, Total Energies has been given the go-ahead to conduct exploratory drilling off the southwest coast after Forestry, Fisheries and Environment Minister Barbara Creecy dismissed an appeal from 18 applicants. What's going on there?
Yes, so the South Africa Environment Ministry has given the go-ahead for them to drill offshore for gas and oil. This is after they rejected an appeal from more than a dozen individuals and lobby groups who intended challenging the decision for drilling off the Cape Coast. I mean, this is the latest in a series of actions seeking to halt the energy groups exploring for new offshore discoveries in Africa. It sought to persuade the Environment Minister to set aside the authorization given on several grounds, ranging from marine noise, oil spills to climate change and insufficient public consultation. So basically the minister has dismissed these concerns in a 144-page ruling and has said that she is satisfied that the impacts of noise and light have been addressed and mitigated, and as such this ground of appeal has been dismissed. Obviously, the appellants are saying that they're challenging this decision and they find it irrational and it ignores climate science.
Thank you so much, Khanyisa Ngesi, Absa Group Investment Solutions Head.